So now what we want to do is look at the end result that we're constructing, which are the financial statement reports, which we just opened, and the related reports to them, which can be overwhelming because QuickBooks lists a whole lot of reports. But we want to keep focused in terms of what's the major focus of the reports and what are we using them for, and then how are all of these other reports helpful? What are they there for? And if we keep that main kind of focus, then it's not too difficult to understand what the reports are doing. So let's get an idea of that. So what's our main goal for the bookkeeping process? We want to construct the major financial statement reports, basically being the balance sheet, the income statement. You can also say the statement of cash flows, but that report is a little bit different because we basically construct it after, in essence, if you were thinking about order of operations, constructing the balance sheet and the income statement. Why are we doing that? Well, in the United States, we need that information at least for income tax preparation. If you're a small business, for a Schedule C, which is basically the income statement. However, you don't just want the income statement because if you don't have the balance sheet, then you're losing the double entry accounting system. So there's many small businesses in the United States which are basically just compiling an income statement for their tax preparation. That's fine, that's great, but I would not have any level of confidence about the accuracy of their income statement, and therefore they're more liable or subject to the whims of an auditor in the event of an IRS audit because they're not using the double entry accounting system, because the double entry accounting system includes the balance sheet. So by using QuickBooks, even for a small business that just needs an income statement, the level of accuracy has gone up greatly, which safeguards us in the event of an audit for the income tax preparation. Now, if you're a bigger business, you might have to include the balance sheet on the reports that you are creating for like a corporate tax return or a partnership type of tax return. Also, you might have external reporting needs, possibly needing the financial statements to give to external investors, for example, and you might need it for the bank in order to get a loan. And of course, we need it for internal purposes for our own decision-making processes. So that's what we're trying to do. We're trying to construct these financial statements, balance sheet and income statement. So where do all the other reports come into play? Because if I go to this first tab and I go into the reports button over here, closing the hamburger, we see there's a whole lot of other reports. What are all these doing? How does that fit into our overall goal and objective? So note that we can think about all these other reports for the main part as generally being more information about one or multiple line items on the balance sheet or the income statement. So you can kind of think about like the balance sheet or the income statement as like the list, the chart of accounts or the main chapters. And then if you want to drill into more detail about the backstory of any of those particular accounts, you might be able to do so with other reports. What's the main other report we would do that with? Well, we would drill down on the data. So if I drill down on the data for the checking account, as we have been doing, we get to what we might in accounting world, textbook world, call kind of like a general ledger, a GL type of account for this particular account, breaking out the information that constructed it by date. In QuickBooks terminology, we're calling that a transaction report. So that's going to be one of the major reports that we can get to easily within the QuickBooks system, and we think about it as the direct construction of the financial statements. In other words, if we thought about building the financial statements, we think about the journal entries, which are constructed in QuickBooks by the data input forms that create debits and credits that then build, we would call a general ledger account, which would basically be this type of worksheet for all of the accounts, which we would then compile into, in textbook world, a trial balance before then taking that trial balance and creating then the financial statements, which is what we're looking at here. All right, so but then we have a bunch of other kind of reports which are going to have needs above and beyond possibly just the detailed information by date. And the primary examples of that, for example, are accrual type of accounts like accounts receivable, where the detail of accounts receivable by date isn't just what we need. We need it by customer. We need to know who owes us the money, for example. And so that's going to be, and so we're going to have another report that breaks out the same information but gives it basically by customer. For inventory, we're going to need more information, not just by the date of the transaction, but by subledger of units of inventory for the transaction. For property, plant, and equipment, I don't just need to know the date of the property, plant, and equipment. I need a subledger breaking out all the types of property, plant, and equipment, the book value, the accumulated depreciation, accounts payable. I'm going to need not only the detail on dates, but also who we owe the money to. Now remember, all these other reports giving you more detail will become more and more necessary as your accounting process becomes more complex. In other words, if you have that easy accounting system, you just get paid by Google because you're a YouTuber or something, then which is great, because then it's really easy. You don't really need all these other reports. I'm not tracking accounts receivable. I might not even have that much property, plants, and equipment, although I probably at least have a computer or something like that, right? And so I don't have any accounts payable because I'm just going to pay them off as they come due, and so on and so forth. I don't have any inventory because I just make stuff and then I get paid for it, right? That's pretty nice and simple. But if we're in a situation where, of course, we have to collect the accounts receivable, that's going to add another detail on report necessities and so on and so forth. So that's how we want to think about it. Financial statements, balance sheet, income statement, those are not just reports. Those are the financial statements. That's why they're in the favorites. And remember, if anybody says that the balance sheet and the income statement are not their favorite reports, their favorite finance, then they're wrong, right? They don't even listen to them. It's like, how can they not be? That's the summary of everything, right? That has to be. That's the end result. Those are always going to be part of the favorite, reports. All the other reports are going to be subtabs, more detail, telling you more story about that underlying story, right? It's kind of like in the movies where they have the central theme universe and then they tell all these other stories about the central theme universe, like in the Marvel universe or something. And then you get some stories where they don't tie into the central universe at all. They actually break all the rules, or like Star Wars. You're like, what is this thing over here? It doesn't tie in to the whole storyline. It's stupid. It cut it off. You made something that's like a cancerous thing that attached to it. It has nothing to do with the, right? That would be like having a report that has nothing to do with the financial statements. It's useless. It's worse than useless. It's okay. You get the point. All right, let's go to the first tab over here.